Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a proxy statement. Sounds boring, right? Well, buckle up, because inside this document are clues about who's in charge, how they're paid, and what they think about the future of a company that wants you to trust them with your money. This proxy statement hints at a company betting big on the American dream, even as many struggle to afford it. We'll see if that bet is paying off. This filing is essentially a message from American Homes for rent to its shareholders. They're laying out their performance in 2024 and asking for your vote on some key decisions, like electing board members and approving executive pay. The big picture, affordable housing is a huge problem, and American Homes for Rent positions itself as part of the solution by building and renting single-family homes. But let's see if the financials confirm that. Let's get to the numbers. They claim to have increased same-home average monthly realized rent by 5.3%, and their total revenues went up 6.5% year over year. On top of that, they grew core NOI, a measure of their property's profitability for the total portfolio, by 8.1% year over year. Basically, they're making more money from the homes they already own, and overall the company is more profitable. This is all good news. Here's something that should excite shareholders. They increased their quarterly distribution, meaning the dividends they pay out, by 15% year over year. It is a good way to keep investors happy. Now, before we move on, the Board of Trustees is unanimously recommending that you vote everything, elect the 11 trustee nominees, ratify the appointment of Ernst & Young as their accounting firm, and approve their executive officer compensation. Keep that in mind. So who are these trustees they want you to vote for? The filing lists 11 names, giving a little background on each. It tells their age, main job, how long they've been a trustee, and what committees they're on. Most of them have been trustees for a long time, a good sign they've been committed to the company. It's worth noting that the board seems to value experience in real estate, REITs, and corporate governance. These folks aren't just random names, they have some relevant expertise. These proposals being the election of trustee nominees, ratification of the accounting firm, and advisory vote to approve executive officer compensation. The good old say-on-pay vote where shareholders get to voice their opinion on if executives are paid what they're worth. The filing also reveals some details about the board's makeup. The average tenure of trustees is 7 years, and the average age is 65 years. Also, the board has a tiny bit of diversity with 27% female and 9% racially diverse. The Audit Committee, Human Capital and Compensation Committee, and the Nominating and Corporate Governance Committee are three powerful and important groups. They handle finances, pay, and ensure the business operates smoothly from the top down. I suggest you take note of each of their names. They are in charge of making sure the business is in tip-top shape. The document goes on and shows a table outlining the key experience, qualifications, and attributes of each trustee nominee. Basically, they are trying to show shareholders how good their nominees are. What could go wrong? Well, the board and its committees are also responsible for overseeing risk management. They highlight some key risk areas: strategic, operational, financial, and legal and regulatory. You know, the usual suspects, but in this business, hazards and weather and market dynamics could be huge risks. How much are these trustees paid? The filing breaks it down. Each gets an annual cash retainer plus additional retainers for committee chairs, and everyone gets a stock award. Basically, they're incentivized to keep the stock price up. It makes sense they want everyone on the same page. Who owns this company? A few big investment firms like Vanguard and BlackRock hold significant chunks of shares. Then you have Tamara Gustafson and something called HF Investments 2010 LLC. This ownership structure tells you who has the power to influence the company's decisions. It mentions the Central Bank of Norway. Norway owning significant stock into a US company. That is indeed interesting. The executives also have a share ownership policy, meaning they're required to hold a certain amount of company stock. The idea is to align their interests with the shareholders. If the stock does well, they do well. There's also a clawback policy, meaning if they mess up the financials, the company can take back some of their compensation. This makes them accountable. The most basic thing, the policy on inside information and insider trading, is to make sure that executives are not using inside information to benefit themselves at the expense of other investors. Speaking of executives, let's meet the top dogs. Brian Smith is the Chief Executive Officer, Chris Lau is the Chief Financial Officer, and Sarah Vogtelol is the Chief Administrative Officer and Chief Legal Officer. How much do these folks make? That's where the summary compensation table comes in. It lays out their salary, stock awards, and other compensation. Now, Remember, they all got a nice percentage of advisory votes on executive compensation, so their pay should be safe. It also mentions that some NEOs are entitled to awards after their term is over. This might influence their decision to leave as it increases the rewards for loyalty. Finally, the filing includes the CEO pay ratio. In 2024, the CEO's total compensation was 142 times that of the median employee. That's quite the difference, and it may be something to consider when placing your votes. It included a section talking about pay versus performance, showing how total shareholder return is connected with actual executive pay. It seems they put the money where their mouth is, with a lot of pay tied to stock performance. The most used performance measuring stick is the core FFO growth, followed by relative TSR. These numbers drive decision making that could affect the business. Now let's step back and look at the big picture. American Homes 4 Rent is trying to position itself as a solution to the affordable housing crisis, and their financial results show some positive trends. Rising revenues, increased profitability, and a higher dividend for shareholders. However, it's worth watching those risks, especially making related to market shifts. The strength of the firm relies on a few big shareholders that all seems balanced so far. The Hughes family, by way of share structure and options, still seem to have all the important shots in the company. It will be interesting to see how that influence plays out as the years go on. Overall, the company seems solid, but the high CEO pay ratio and the company's response to the broader housing issues could be areas to keep an eye on. The board has experience, but it's always worth asking if they are truly independent and if there's enough diversity of thought. Thanks for watching. If you found this analysis helpful, please like, subscribe, and leave a comment below. What other corporate filings should we decode next? Let me know.